Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, the 15th, April 15th, and happy Friday to y'all. Hope you guys have a wonderful weekend coming up. And we'll start off with the economic news. We'll start off with the headline CPI report came in relatively high, 0.5%, but with expectations, both expectations. But with it, if you take out the food and energy, then you have the core CPI, which is what the Fed watches. Then it is pretty tame, 0.1%. The capacity utilization, another inflationary index that the banks and bond traders watch, shows economic demand to be even tempered, and there doesn't appear to be any immediate threat to inflation concerns. Excuse me. In the New York region, manufacturing is up via the Empire State Index, which we also saw industrial production up a bit too. Manufacturing really hasn't been too much of a concern in our current economy. It's been the housing industry. Consumer sentiment was even keeled today too. Personally, I've been seeing some uptake in my area for more homes coming into the market, as well as people actually buying right now. Of course, we're heading into the summer market, so it can be seasonal. On the headline news front, quite a few large companies like B of A and Google missed their earnings reports. Also, the economies that have been doing well during these past few years, China and India most notably, are seeing surging prices, very high inflation in their countries. While they've been trying to make measures to slow down their economy, make the economy slow down, all this news, you'd think that the stock market will react negative. I guess they're on holiday mode today. Because these aren't great economic news, so let's see how the bond market is playing out and where interest rates lie today. Uh, so we're at the bond market here, and as you can see, we had kind of a bit of a drop here yesterday. We were way up here. We had started off the day about 16 basis points higher than where we left off on Wednesday, and then we had a pretty big drop, about 35 basis points. I think it dropped, or 34 basis points it dropped. So we just ended up just below the 10-day moving average, but above the floor of support here. But this morning, as we came up, we started up above the first line of resistance and went up 35 basis points from where we ended yesterday. And then on top of it, we were up 9, now we just pulled back to about 6 basis points. So we're up for the day. It's going to be hard to break above this resistance here. I'm not sure if we'll break above that. If we do, we might see a nice little rally. So we can hope for that. So right now, the mortgage rates are actually better than they were yesterday, or depending if they did a price for the worse. So depending on how the lenders did the pricing. But we're at about the same, or maybe a little bit better than what we had yesterday, Thursday. So I expect a little bit prices. All right, folks, on to the next one. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases, so I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.